The US-Iran conflict is escalating and the Strait of Hormuz is closing. While some investors are panic selling, the smart investors are executing on a specific playbook to win. Oil prices have gone up to $90 just from $65 a few weeks ago. And today I'm going to be telling you what assets across stocks, crypto, and commodities that you should be looking at for your portfolio to benefit from this US-Iran conflict. I'm also going to be telling you how this conflict affects inflation and how it has changed the Trump administration's stance toward the crypto market structure bill. If you are an investor who cares how your portfolio performs in an unpredictable market, then you're going to want to hear this. Let's discuss the US-Iran conflict, but from an investor's viewpoint. The US-Iran conflict started on February 28th, and since then the war has escalated. The conflict is now going into the second week and has lasted much longer than the administration previously anticipated. Why? Because literally, on March 1st, a day after the conflict started, President Trump said that the U.S. had agreed to negotiate. Later on, Iran denied that it would negotiate, and a few days later, the U.S. now expects the conflict to last 4 to 5 weeks or even longer. And we come up to some key points where the U.S. wants to pick the next leader of Iran or help doing that, and that there won't be any negotiation with Iran unless they unconditionally surrender. Last two parts that I mentioned, the picking of Iran's leader and the unconditional surrender, that signals that this conflict may last many months to years. Also, we have Iran threatening to close the Strait of Hormuz, which approximately 20% of the world's oil traffic goes through. Iran shares a 100-mile border along this strait, which would make it very hard to stop them from attacking any type of transit ships going through this area. So what does this signal for investors? It signals that this is going to be a prolonged conflict. And we've seen that this has been communicated to us in the markets, just looking at oil prices going up almost 40% from $65 a barrel to $90 per barrel in just about a week and a half. Now let's look at what you need to have in your portfolio potentially to benefit from this conflict when you're looking at stocks. If you want pure oil exposure so you can benefit from any increase in worldwide oil prices, an exchange traded fund that you can buy is called USO or United States Oil Fund. This fund directly buys oil futures and it gives you very good exposure to oil prices. And you can see just over this period before the war until recently, while oil is up 37%, USO is up around 39%. So very good correlation. But as we continue our discussion, go ahead and subscribe so you can continue to get valuable insights that look through the noise and the hype. If you're looking for clean direct exposure to natural gas, similar to USO, you can buy something called UNG or the United States Natural Gas Fund. And they basically do the same thing buying natural gas futures. And as you can see, natural gas prices are up 9% since before the conflict started. And also UNG is up around that same exact amount. If you're looking for a stock, then you have to look for companies that are not in that region that export. One of those is Generi Energy or ticker LNG. And they're literally one of the largest exporters of liquefied natural gas in the United States and globally. And it's estimated that these natural gas exporters from the US are now making an extra $1 billion per week, that they're up 15% compared to gas being up 9%. For crypto, the main thing you have to worry about is that with increased oil prices, you have increased inflation. Higher oil and gas, that affects heating bills, that affects transportation, flights, everything literally goes up almost with oil prices. Second, for the war, well, wars cost money, and I mean a lot of money. You've seen how the U.S. has said they've hit 3,000 targets. These missiles are not cheap. Just the Tomahawks the U.S. have used extensively in this war cost around $2 million each. Certain studies show the first days of the U.S.-Iran conflict cost the U.S. around $1 billion per day. Now, if you think about it, we're already close to $40 trillion in debt, and these costs are already exceeding budgets. And the U.S. is about to continue. More U.S. government debt will be issued, which equals more inflation. I'm sure you saw Trump's tweet in the middle of these hostilities just last week to pass the crypto bill. There's more details on the crypto bill above if you have any questions, but basically this boils down to who's going to pay for the U.S. debt. If you remember, the Genius Act was passed for stablecoins in 2025, and that meant that companies like Circle and many other companies could issue a USD stablecoin, but they must buy US government assets at a ratio of 1-to-1. That means for every $1 issued in stablecoins, it must be backed by $1 in US government issued assets, such as T-bills or T-notes or T-bonds. So why does this matter so much to Trump? If the adoption of crypto increases and more stablecoins are used, crypto companies like Circle buy more US government debt. And as you know, this debt is bought for every stablecoin that issued. And with more US government debt being issued and bought, that gives the US more money for spending. So as investors, you know that more inflation is coming. This through higher oil prices that we see now. And you also have the government spending large amounts of money for this war that potentially could be long term. With that, how do you protect yourself? Bitcoin is definitely one of those best hedges against inflation for your portfolio. And you can find out more just looking at the video above. Now for commodities, for silver and gold, that really hasn't been much change. But as you know, these two assets already had historic rises. Maybe some of this is priced in. Lastly, I want to explain why this war will not end fast. Or you can let me know what you think. Don't forget, similar to Venezuela, the US is on a mission to protect and defend the US dollar. Previously, Venezuela was not selling its oil in USD. Whether they were doing a barter system or whether they were selling directly to other countries like China, they were not using the US dollar. But now, after the US-Venezuela conflict, I can assure you they are selling those oil assets in USD. So what does this have to do with Iran? Venezuela had the biggest oil reserves in the world. Well, Iran is actually number 6 in the world for oil production at 4.6 million barrels per day, and it has the third largest proven oil reserves in the world at 200 billion barrels. This is about just 100 billion less than Venezuela, which was number 1. Second, for gas, Iran is number 3 in production and is number 2 in reserves. Just to connect Venezuela and Iran, when the first conflict between the US and Venezuela happened, there basically was a unconditional surrender. At that time, Trump said that 30 to 50 million barrels of oil will be sent to the US, and the US would sell these at market price and have full control over those proceeds. That was in January. By February, Trump stated at the State of the Union address that they had got 80 million barrels of oil from Venezuela, which is much more than the original 30 to 50 million he indicated back in January. So just think about it. If Venezuela was required to give all their oil to the US as part of an unconditional surrender, then what would an unconditional surrender entail for Iran? A country who has a large amount of assets of oil and gas and better production capacity. Now the tricky part from an investor standpoint, how long this conflict will last. 1 month, 2 weeks, 2 months. I'm going to tell you some things that signal how long this conflict could last. One of Iran's biggest allies in the region is Russia. And as you know, Iran has helped Russia immensely in its own war. And now, less than a week after the US-Iran conflict has started, Russia is already reportedly helping Iran. Second, let's look at China. It's estimated that China receives 13% of its oil supply from Iran, which is over 1 million barrels per day. And that's just the estimation. If you notice, Iran has announced publicly that China is one of the few countries that are still allowed to travel through the Strait of Hormuz without threats of an attack. For both Russia and China, whether it's security and economics, they both have a strong interest in not letting Iran fall to the US. And my expectation is that those countries are going to do everything they can to make sure that does not happen. So these are the things that make me think this conflict is definitely going to be prolonged. And this is why you should definitely position your portfolio for a prolonged conflict that includes potentially elevated oil prices and gas prices, as well as protection against inflation. And that's what's the angle on how smart investors can benefit from this US-Iran conflict. If you enjoyed this video, believe it has some valuable insights, hit the subscribe button, turn on those notifications, and I'll see you next time.